Good day. Ira Epstein of Linden Associates with your SPDR ETF wrap-up, and this is for Tuesday, the 8th of September, 2020, and a big break day, of course, that we're looking at. In fact, it wasn't just today. The market's been on a tear to the downside. Strange, maybe it's the combination. Market got a bit overvalued in some of these tech names. Maybe the market is paying more attention to the closeness of the presidential election. Maybe the market is just worried about things in general, and maybe the kids went back to school and everybody's attention turned quickly to the marketplace. Something happened because this market, when I took off, just literally came apart. Behind me on the board, you have two markets in the green, TLT, FXY, the yen, and Treasury instruments. Other than that, it is a sea of red. Be it the energy markets down, be it all sectors of the S&P were down, markets got hit and hit pretty hard. Now, as we take a look at XLK, when I had left, I told you we had what we call our first gap, then our second. The question was going to be, were we going to get into an exhaustion gap? And we never did. Instead, what the market did is it started its correction. We have filled one gap price. There's one more left here close to the 110 area. We may make a run for it, hard to tell, but we filled one of the gaps already. And gaps on charts, they like to get filled, so pay attention to that. The market broke the pattern of an uptrend, and it broke it right here on, this was Friday, the 4th. Up until then, we had this pattern of higher lows, you see them, and higher highs. The key, right here, 118.51, if that's taken out, you've broken that pattern. You've broken some key chart lines as well, and as you can see, the market followed through a little bit today. When we look at the 18-day average of closes, the market did pay attention as it broke down on the 3rd and the 4th, right into that number, and it was trying to hold it. Today we come back and the markets let go. So what about the next areas for potential support and resistance? Well, on the way back up, the resistance could easily be the 18-day average of closes at 118.88. Downside, if you're looking for moving average support, 104.14. More likely is going to be where the Bollinger Bands come in because, number one, they're above that 104.14 level. So the 110.46 level is what I'd be looking at to see if the pros take some money off the table if they're short this market and been pressing it. As for the upside, the resistance still the upper Bollinger Band, but first real resistance, that 18-day average of closes, and momentum is oversold. So, in summary, we stepped out of the uptrend. We're not in a downtrend. A downtrend would have lower highs, lower lows. You have a higher high and a lower low. Momentum pointing down, bias down since you're under the 18-day average. Target number, 110.46. When we look at SMH, same thing. Got up to the upper Bollinger Band's been fighting a battle right through here in a lot of sideways action. Gave you a head fake while I was gone. This head fake happened right about here. You can see, I can't argue that the market's been going sideways like I could in so many others. I've got to give it that the market's been paying attention to the upside and trying to push out on numerous occasions the upper Bollinger Band as it worked higher. You had that again happen on the 3rd. This is the 1st, I take that back. The 1st, then the 2nd, the 3rd, fell back to the 18-day average. When it did so, it got as low as 172.37, breaking through a prior low. That puts into play the market either holds what we call that line in the sand, and so often in what I teach in my charting courses, when you pull back, it's often where you first go. If that gives ground, the next support number is the lower Bollinger Band, and you went right down to it, and that's basically where the market is fighting right now. In XLI, you stepped out of the uptrend right through here. You can see that. Momentum down, bias down, and the market, again, a market that got stymied by hitting that upper Bollinger Band. You can get over these bands, but you pull back in them. That's the whole theory of it. And the question is at what level if you're looking to be a buyer. Sometimes you get over them and you have to come in at a level that's even higher than what you might have thought originally. but it's still good steed that when you pay attention, that when you hit those bands, a lot of systems are programmed. That's what I believe. I wish I could prove it. I don't know all the systems out there. That you hit a Bollinger Band because 95% of the time the market will trade within the band. People take money off the table if assuming they're bullish and you hit the upper band, assuming you're bearish, it's the lower band. Energy looks to me like a rolling over of this market. Bearishness, that's what I see on the chart. Embedded reading, very bearish. I look for the pros to keep selling. Good rallies in this market. Now I think the marketplace is going to be looking back at that high, and until it's taken out, I think the bears are emboldened, and I think they're going to say, we've broken out to the downside, where is the bottom? That's what I think the question will be. QQQ. If you come back 2 days, this is where the market got itself in trouble. Right here, lost its embedded reading, which often leads for a challenge of the 18-day average of closes, which is exactly what it did on the 4th. Then the question over the weekend, what's going to happen? And as you know, there's a lot that went on. It could be Tesla, it could be other things that went on, a lot of disappointments in the marketplace. So we're selling off. Where's the downside? Well, why would I think different? If you go to the lower Bollinger Band, I'm expecting the shorts to step out of positions against that. You're oversold, not trending. It's a correction, not a trend yet. In EFA, the emerging markets, you got a higher high, lower low. You've gone from upper Bollinger Band number in 3 days to lower band numbers, just back and forth. And you had been in one of these sideways patterns. Hasn't changed. Is this a breakout to the downside? We'll find out. If there's no follow through here, you'll get an idea by the market going back to the 18-day average of closes. GLD still acting bearish. Now, a technical sign would happen by taking out today's high tomorrow. When you have an outside day down, which you have today, what is an outside day? You took out the previous day's high and low and you closed lower. That happened. If you take that out, look for a fast challenge of the 18-day average, and this will break this pattern that we have. I think we're just going to end up still drifting more or less sideways, going nowhere for the short term. Ultimately, I think the longer term charts, the weekly charts and so on, still look fairly bullish. In TLT, you've got higher lows, higher highs. So the market went up when I was on my couple of day break there. It seems like I was gone a long time. Yeah, I think it was Tuesday, Wednesday, and Thursday, and Friday. So not that long, actually. But when you're under the 100-day average, it becomes the resistance point. When you're over it and you fall back, it becomes a potential support zone. But when it got under it here, it acted still as resistance. So I have reasons to believe that's the case. We'll see if the market wants to fight much of a battle with it here, but you could see how it's just fighting between the 100-day average and the 18. What is the trend? It is up. What is the bias? Down. Why? 163.96 is the 18-day average of closes. You determine bias by looking at the settlement to that. So on my checklist for a trade, I want to see the bias up, the momentum flat to higher, and I want the swing line up. I don't have that right here. I've got the flat momentum, that's okay, but the bias is down while the trend is up. Looking at FXE, if you take a look at what this market's done, up to the upper Bollinger Bands. What do I say repeatedly on this? Here's where you're at on August 28th. You get to that number, this is the 31st. I would have still been here talking this way. I would have said that's where I think the pros are stepping out of the market. We'll see what it does there. You had 2 days of playing with it, then it suddenly let go, kept going down, you can see it, and now at the lower Bollinger Band, you know what I'm going to tell you. I think the pros are, if they are short, I don't know if they're short or not, but if they are on different techniques, I think they're covering their shorts right through there. We also have a big meeting coming up. I think it's Thursday, European Central Bank monetary policy meeting. Market's not expecting an awful lot at this meeting. October is going to be more interesting. There's still plenty of money left that the ECB has put away, and we'll see what they're going to do with how to get their economies going. They are losing the battle of inflation. It just keeps falling the wrong way. It's not going up, keeps dropping on them, and it didn't help them any to see their currency get up near the 120 level. Want to remind you all the different things that we do. You know, if If you're looking to start your day off with something interesting, you might want to go to our website at www.iraepstein.com. Go to the word research. You'll see the different packages of videos I put out for subscribers. It is in those, like I did this morning, it is in those that I begin recording at about 5:40 in the morning for my subscribers, and then in the afternoon at about 3:30 or so, I start recording an ETF spider video for those subscribers. You tie the package together, and what you've got is I've got my ideas on spiders and ETFs that either stay together or not by what I'm going to tell you in the morning on the futures. Why are those two together that way? As you know, many, be it DIA, SPY, they look at one thing. They're looking to see what the futures are doing for their pre-opening and get an idea of where they're at, and then that ties in with what I do in the afternoon. It's all explained. www.iraepstein.com. Word is research. Take a look. I'm Ira. You have a great day. Good to be back. I'll see you tomorrow.